All right, a lot of talk of that there's some kind of growing fuckastrophe in private credit. Now, what the fuck's private credit? Okay, so it's companies that aren't regulated by the banking regulator. So there's most of the big companies, we're all familiar with them, the big banks, other companies, insurance companies, regulated. They're regulated, and the banking regulator is obviously the pinnacle. There's other regulators, like there's the provincial regulators, and there's the Ontario Securities Commission, and there's other securities commissions. But, you know, when it comes down to Security Commission regulation, I'm not sure those guys are really on the bit. You know what I'm saying? So what is private credit? It's these entities who raise money either in the public markets or through private investment, and they lend it out. They may even borrow some of it from a bank, okay? But a very tiny percentage of it, and they lend it out, and they're working on spreads. I mean, it all sounds like a great idea when you're doing it, right? I mean, oh yeah, you can make an extra % or two on the spread. You're gonna look like a hero. You're gonna make a shit ton of money. Great. But what if it turns bad? What if the economy goes into the shitter in Canada, particularly Ontario? And what if real estate goes into shitter again, particularly Ontario, British Columbia? How vulnerable are these private credit companies? And again, they range all the way from a tiny mortgage investment corporation all the way up to giants like GoEasy. I'm not saying there's anything wrong with any of these companies. I am not, underline, not suggesting that. But what we got to think about is these companies normally don't have the astronomical amount of capital that the banks do. The banks are up to their ass in capital. And, you know, in other companies, lending companies, they have the backing of CMHC if they're in the mortgage side. There's a lot of checks and balances, but for private lending, private credit, we'll see, because we know there's stresses in the marketplace for these companies. We know that, 100% we know. And that's not good if you don't have a wealth division, or you don't have, the banks have everything going for them. They got cap markets, they got day-to-day banking, they got big wealth operations, they got so much diversity. These companies don't. They're just in the lending business. And if the lending goes sour too fast, now there's companies just plain blowing up in the States. They're just going into receivership. One in Britain just went into receivership. Same sort of ideas, private credit, okay? So am I saying that there's going to be a big fuck show in Canada on private credit? No, not saying it, but some people in private credit may have fucked around. Now they're going to find out.